Hi, I'm Dave Brickell, Director of Sales at Paradigm. Welcome to The Big Picture.
Vol is mean reverting, so the obvious trade is always the expensive one to
this
carry.
Whole peak inflation, peak rates narrative, peak Fed, which we've been talking about.
It's an expensive place to find out. Crypto Vol, a potentially fatal place to find out.
The crypto option markets are definitely showing some signs of life.
Hi guys, this is the start of a new segment of The Big Picture that we're going to be doing with our partner analyst, Greg from Amberdata. So Greg's been on the channel a few times now, and his episode from a few weeks ago, which we will definitely link in the description below, was so well received that we have asked him to come on more regularly and go through some additional crypto vol analysis. So very excited to have Greg doing this for everyone. It's a great partnership between our firms. You know, he's one of the best in the business around crypto vol analysis, founding Genesis Volatility, designed specifically for this sort of analysis that you are going to be seeing today, and then subsequently merging with Amberdata. But before we begin, smash that like, hit that subscribe button as we continue to deliver you some of the best content in crypto derivatives. Greg, want to take it away?
Yeah, thanks so much for that intro, Joe. I really appreciate it.
Of course, man. Of course.
Cool. So as we're recording this, we had the SEC coming after Binance a couple days ago, and then coming after Coinbase. So it's been a busy week. We've had like the lowest vol regime in a long time, and this gave us a little bit of a pop. So now I kind of want to just look at some dealer positioning to see, you know, how are they going to be hedging these flows? What's going on? So I'm starting with ETH because ETH dealer positioning is like so clear.
Yeah,
strong options right now, and so any vol for ETH dealers or ETH option dealers is just nothing but good for them. So let's just see like what this looks like. So this is the total gamma profile. So just kind of a little bit of a background real quick. At Amberdata Derivatives, what we've done is we've created a set of rules to analyze flow appropriately. So we look at every times and sales trade, and we take every instrument back to inception. And when we look at a trade, we marry that data with a level 1 order book so we can see the best bid, best ask, size, vol, prices, all that stuff right before the trade, like milliseconds before the trade, milliseconds after the trade. And then we have a bunch of different rules to get the true aggressor. So like, here's a simple rule. You know, someone lifts the offer for a 2-lot, and then the offer decrements from pre to post trade. And you can see, okay, someone, you know, paid the spread and lifted the offer. That's kind of easy. Well, right. 30 different rules to get the true direction. We put that into a matrix, we score everything, and then we get the probable direction. We assume that dealers are passive, and then the aggressors are sort of like the street, essentially.
Yeah, that makes a lot of sense because, like, I mean, hell, I saw it a ton in equity derivatives where things would trade so tight, especially spreads, where market makers were like, oh, I'm going to lock one leg at mid and then make like a bid offer on the other, where it's just like the directions are just like constantly incorrect. And you even do see this a little bit in crypto. So kind of this methodology to kind of refine that and make it better is, you know, that's next level stuff.
Love it. So then what we've done here is we get a good idea of the dealer positioning. And so we can essentially see how the gamma profile is going to change for dealers. So when we're looking at the ETH gamma profile, this is sort of the dealer positioning of ETH. We can see here, this is the total profile. So this is going to be all the expirations put together. Dealers are obviously long gamma, long vol. So any realized vol we get in ETH is really good for dealers. If I go to the next slide, we can see sort of the zoomed in version for different expirations. So this is going to be a June 9th expiration. We can see essentially same type of deal. Dealers are net long, not by the same extent. You can see the y-axis is, you know, $1 million per notional per 1% move. If I scroll down to the next one, June 16th, again, clearly long, 1.2 to 1.4 million. And then here, this is the one expiration where they're net short, but it's only by 800,000. And then the biggest expiration is the quarterly contract. And so you can see here, they're essentially net long where we're at here, unless we get above, sort of call it 2,100. And then the gamma is 6 million. So essentially, you know, that realized vol, dealers are positioned for that. There's been just a ton of supply coming online still. So if I look at the term structure richness chart, this is one of my favorite charts. a reading of 1.0 is a perfectly flat term structure. We have a catalyst for a pop for the term structure to go flat to slight backwardation a couple days ago. The Binance news, the CoinDesk news, all that stuff. So to me, the way that I'm thinking about it is like we have a reason for a pop, but the way that the market is structured right now in the short term here, I'm kind of thinking nothing happens still.
So when when this line goes down, that means the term structure is going, flatter more into backwardation. Is that correct, or is it the other way around?
The other way around. So like a reading of 1.0 is perfectly flat. A reading of 1.1 is a backwardated term structure.
Got it.
And then below 1 is a contango term structure.
Cool. Great clarification. Thank you.
Yeah, definitely. So my thinking is like, okay, we got a pop. This is kind of like sell into the pop, because right now the inventory of short-term options for dealers, like they're stuck with it. So they're probably gonna try to cover some volumes.
Dude, I don't know. Like things are past couple days, things are starting to look pretty interesting. So I think there's kind of this sort of like interesting changing dynamic going into especially the June quarterly expiry over the past few days. And this large overwriter that we've mentioned that was short a boatload of these June 1800s to 2000s, that had previously loaded the street with gamma. The dealers who got long this overwrite have just been stuffed with this strike and puking it on Paradigm, absolutely puking it out. Like as a data point, so the net taker Vega sold on Paradigm of the June 1800 strike is over 200,000, which is by far the largest absolute amount of Vega sold on Paradigm of a given strike. Market makers, and it's just the market makers who put up this overwrite, acting as a taker and selling it back out on Paradigm. But now something very interesting is happening. And what that is this overwriter that is previously stuffed the street with these June strikes is now beginning to cover these strikes. In the past 3 days, they've bought back over 100,000 contracts of the June 1800 to 2000 calls in lifting dealers out of this long gamma. So it's starting to create this interesting dynamic, the June expiry. If this overwriter continues to cover this June short and, they've kind of showed their hand, they still have a lot outstanding. If this trend continues, and we don't see that much incremental supply of vol, just given the absolute level of vols. I mean, we all know what ETH vol is capable of, right? I don't want to hear about this low trailing realized nonsense. Then there is this potential for, the front end to jack higher into the expiry and, potentially see some decent realized moves.
Interesting. So when I've looked at the flow, I've still seen buyback of June, but then roll out to further expirations. I've still seen that flow. Have you not been seeing that? So it's just an extension of essentially.
Right. But like this is getting extended out to like March, and SEP, right? The June is going to have a lot more gamma.
And then I got to think about the spot vol correlation. So like, let's say someone's buying back June. Well, this is going to be upside vol. And right now the market is not coming from upside vol. Like the reasons we have a term structure pop is because of Binance, is because of Coinbase. Those are like downside catalysts for vol. And the market's holding pretty nicely. Like it was enough of a surprise to pop the term structure into contango, into backwardation and create some sort of demand for gamma. I just think it's one of those things like you just sell the pop. I personally think like the short-term stuff, I still like ETH vol longer down the term structure because I think it's too unpredictable to see what happens.
Right.
But in terms of kind of, if I look at all these expirations, shorter term expirations, to me, it still looks like dealers are pretty long gamma. And I just think like time passes, that the shock event has kind of.
Yeah, no. And I would tend to agree with that. And we've only started to see like the beginning of the covering, but we still have 2 weeks, 2.5 weeks until June, right? And this is the main guy that is supplying, all this June gamma to the dealers. So if he starts lifting this stuff out, I mean, I'll tell you, like all the market makers on Paradigm that we speak to, like the main conversation is like, how much June they have left to cover, how much June is left, right? So it's certainly on the top of mind. And look, maybe it's wishful thinking. Maybe I just want some upside realized vol because we've been stuck in this range bound market this entire time, but we'll see.
Yeah, very interesting. If we go to the realized side, so here's kind of what I'm looking at the realized side. I mean, we're still kind of in this like 38, 40 kind of zone for 7-day realized. Like the big move, so if I look up here to the top left, so I'm just looking at the past week of hourly realized in annualized terms. So sort of the big move was kind of call it 70 vol for an hour. And then that was pretty much, that was the event. It was 70 and 65 vol. Everything else kind of is back to the mid 30s is kind of what it looks like. So like, to me, like we need to see realized vol to justify gamma levels. Obviously we have a little bit of a variance risk premium, lower right chart compression, but like assuming that the vol events pass, like that stuff will roll off and then we'll go back down to like the lower realized. I just think the front end of the term structure, like, I don't know, like you need something to happen there. And if nothing happens, like that thing is just going to be overpriced.
Yeah, fair enough. And I mean, we'll see what happens next week. I mean, next week's a big week. I think CPI and, FOMC. So, again, maybe there's wishful thinking. I mean, I just want some action. So
those are real catalysts, no doubt. Looking at Bitcoin. So Bitcoin's a little bit of a different story. So the dealer profile, dealers are looking good on a lower move in Bitcoin. And it's the upper move that are not looking good based on our profiles. If I break into the different profiles, like the shorter dated stuff, so we could see basically short this June 9th expiration. Again, same type of profile here for the 16th. The 23rd is the inverse. And then the 30th, the quarterly expiration is really sort of the same profile. So basically, dealers would like a move lower and then would not like a move higher. And so that'll be interesting. I mean, if we get like a crazy, weird CPI print, we could see Bitcoin rally or weird FOMC thing. FOMC to me, when I was sorry, do you have anything you want to say on this?
Yeah, I mean, I look at this and it kind of just feels like dealers are to kind of long this buy, put, sell call risk reversal. You know what I mean? Like, and it's certainly indicative of the flows we're seeing on Paradigm, where it's just like all the downside flows are just dealers trying to sell. But then when you kind of have that tactical buyer, especially just given the absolute levels of vol, like, just looking for a return to like the top of the range, not even like breakout sort of call strikes, I'm talking like 29K sort of stuff. Dealers even then are like, nope, man, don't really want to touch it. So.
Yeah, it's interesting. That's cool that you guys are seeing the same types of flows.
Yeah.
Yes. Kind of from a macro standpoint, CPI could do anything. I don't really follow. I mean, I look at CPI, but I'm not an expert on deciphering what the next CPI print is going to be. FOMC, I mean, sort of the whisper is that the Fed is going to do a, not a pause, but a skip. So they're going to do a rate skip. So basically they're going to be in wait and see mode. So assuming that they are in wait and see mode, that event going by is just like vol crush event. So that'll be interesting. What can we get, like what can get us to rally back into this negative gamma zone, like past 30K, and I assume we're not going to get like FOMC cut or anything like that, or like the guidance is probably still going to be in this wait and see mode. So I don't expect anything there. CPI, could that be something? Maybe. I think most likely though, what we're seeing here is the vol is coming from downside right now based off Binance and Coinbase. That's good for dealers. And so what's going to get us higher? I'm not sure. So that's kind of how I'm seeing it. I don't know if you have opinions there.
Yeah, I mean, like it's crazy, just like the amount of bad news that we've had. Like, I mean, you even said this year, but like over the past week, and just like each new event is just like, less and less impactful in terms of like downside, sort of spot action. And I think for the Coinbase case, that kind of, makes sense. There's not like criminal charges being, thrown at here. And the Coinbase is much more around the conversation. Is it a security or not? Right? Like, look, I think base case, this is probably just going to end in, you know, some sort of fine, and it's kind of just going to be business as usual. You know, and potentially it's something where we actually get some regulatory clarity, right? So I think it kind of makes sense that we, you know, Binance took us lower, Coinbase kind of took us back, right? You know, in terms of upside catalysts, you know, I don't know. It's tough to really see them. I know a lot of people were kind of like pointing at, like, you know, the Asia, Hong Kong news and, you know, them green lighting the retail trading, but it's just such a you know, medium term to long term narrative, right? Like there's only 2 exchanges, I think, like Hashkey and OSL, that have like the approved applications out there. So I don't know. You know, could be status quo of kind of sticking in this range.
Yeah, it's interesting. It was pretty cool to see like crypto hold their levels pretty nicely going into that Binance and Coinbase news. And yeah, to your point, like, sounds like Coinbase is just a staking issue. And so we'll see what that looks like. Staking in securities, but not like a criminal thing. And then Binance, I don't know, like, could that really be, you know, funds are not SAFU? I'm not sure about that. That would be a bad catalyst for sure.
Right. Right.
In terms of term structure, you know, same type of pop in Bitcoin. So we just had a pop to slight backwardation. Now we're kind of flattish. Let's see what happens, you know, post next week. That thing probably gets smashed again. And then here we got a crush in variance risk premium, lower right. So, you know, it's kind of near parity. We'll have to keep up realized vol to keep that up though. So, you know, that once that event kind of falls out of the calculation window without another event, we're going back down towards the 30 level.
Right.
And then the move in Bitcoin was a little bit higher. So we have a peak out at 80 annualized vol over the week, whereas ETH was 70. But again, that was only a couple hours. And then after that, we're back towards, you know, mid 30s, low 40s.
Right. I mean, damn. I mean, it's just crazy how low realized vol is now for this asset class.
Yeah, it is interesting. It's very interesting. And if you look at the macro, I mean, like the macro vol or like equities vol, that made lows below pandemic event. So since April 2020, the VIX is finally below those levels, and that started this past week and a half. So that's kind of interesting. Like that the VIX vol regime is headed lower. Vol is usually correlated between asset classes. Like if things are going crazy in one thing, it's because they're going crazy all over the place, you know. So that's
but here it's just like, I mean, this is crypto, and we're talking about like a 30 realized vol handle for, you know, BTC. Like, do you think it's like this kind of just like sense of apathy? Everybody's talked about like how low the liquidity levels is, and, you know, the order book depth, you know, in the spot market, you know, just due to, you know, what has happened with banking payment rails, and, you know, what's happened with Jump and Jane Street kind of pulling back, right? You know, you would kind of think, you know, less liquidity in those at the top of the order book would kind of, you know, exacerbate those moves in both directions, but it's just not happening, which kind of just tells me, yep, at this point, there's just a lot of apathy in the market.
Yeah, that's a great point. I mean, I still like the long end, long ETH. Like, to me, that's kind of like the wild card. And then financing it with the short end is kind of how I'm still thinking about it. I think vol clusters, we've had like 2 catalysts to move vol. It didn't really move vol. It flattened its term structure. So that's kind of how I'm thinking about it. But yeah, I totally agree with you. Like, this is definitely a low vol regime.
Right. Yeah, and it doesn't help that this overrider sold 400K of March Vega, you know, literally like 2 days ago. It's like the biggest trade I've ever seen in crypto vol. It's nuts. Amazing. Okay, yeah, should we leave it there?
Yeah, that's perfect.